Welcome to today's market report. European stock markets are seen opening lower on Thursday, with investors fretting about a resurgent COVID-19 infections as well as troubled Brexit talks. DAX future traded 0.1% lower, just above 13,000. CAC dropped 0.7%, trading just below 5,000. FTSE 100 fell 0.6%. Trading just below 6,000. Concerns that a resurgence in COVID-19 pandemic could lead governments throughout Europe to shut down their economies again has hit the confidence of investors, particularly after the recent stock rally. New cases are hitting 100,000 daily in Europe. Nearly 20,000 infections were reported in Britain, while the French government on Wednesday declared a public health state of emergency. Germany, France, the UK and others are in the process of instituting measures such as limited lockdowns, bar closures and other systems intended to reduce the spread of infection. This is occurring while doubts are emerging over the speed at which vaccines will be approved, despite the global push for a COVID-19 vaccine, with dozens in clinical trials and hopes for initial inoculations this year. WHO Chief Scientist Swamia Swaminathan reiterated Wednesday that mass shots were unlikely to be widely available in the near future. At the same time, businesses and markets within Europe are becoming increasingly jittery about uncertain trading rules between the world's largest trading bloc and the sixth biggest economy, as the year-end deadline to put a post-Brexit deal in place nears. European Union leaders are set to meet in Brussels later today to discuss progress amid few signs of compromise on the tricky issues of fisheries, fair competition and dispute resolution. In corporate news, Swiss pharmaceutical major Roche said on Thursday that sales fell in the period from January to September compared with the previous year, but it backed its outlook for 2020. Advertising giant Publicis said its organic revenue fell 5.6% in the third quarter compared with the prior year, but this still represents an improvement from the 13% drop in the second quarter. Oil prices edged lower on Thursday, retreating slightly despite a larger than expected draw in US crude supply amid worries about the rising number of coronavirus cases and the impact this could have on demand. Crude future traded 0.1% lower at $40.95 per barrel. Brent contract fell 0.2% to $43.322 per barrel. Gold futures fell 0.4% to $1,950 per ounce. On the FX front, GBP USD is battling 130 as the bulls take a breather ahead of the two-day European summit starting on Thursday. The discussion about the EU's future relationship with the UK will be central to their agenda, particularly after the UK government hinted at its willingness to extend the Brexit negotiations beyond the earlier 15th of October deadline set by Boris Johnson. The Times now reports that the UK chief negotiator David Frost has said to have convinced PM Johnson to keep looking for a deal. Among other developments, Bloomberg reports that the EU seemingly toughened its language on the Brexit matter in its latest summit draft. EU leaders invite the Commission in particular to give timely consideration to unilateral and time-limited contingency measures that are in the EU's interest in case that there is no trade agreement. Fresh Brexit updates and the sentiment around the US dollar will continue to influence the major pair in the day ahead. From a technical perspective, the price is holding on to Wednesday's sharp recovery gains, although the 50 daily moving average at 130.21 appears to challenge the bull's commitment at the moment. A sustained break above the latter could call for a test of the falling trendline resistance at 130.54. A symmetrical triangle breakout will be confirmed on the daily chart should the cable close above that level on a daily basis. The Organization for Economic Cooperation and Development (OECD) recently said, as per Reuters, that Britain should do more to help the unemployed find work, and fixing the huge hole in its public finances can wait until recovery from the COVID-19 pandemic is well underway. Eurodollar is suffering from downside momentum on the 4-hour chart and trades below the 50 and 200 simple moving averages. According to FX Street, the 4-hour chart is showing that critical support at 170.20 is in danger as the Eurodollar pair trades at its daily low of 117.35 at the moment. Eurozone coronavirus cases are on the rise, prompting additional restrictions across the old continent, while US fiscal stimulus talks are going nowhere fast. The dollar index was up 0.1% at 33.483. This is today's market news. Thanks for listening. We'll see you next time.